All right. Welcome to our weekly podcast or whatever you want to call this video cast. I'm your host, Andrew Kimball. I'm here with Ty, our other host, Ty Christensen. I'm coming to you from Nevada, Northern Nevada. Ty, you still in Wisconsin?
From Wisconsin. Yep, still here. Loving it. And I
Nice.
go by Ty Spiker Christensen. Get the whole flavor.
Oh, yeah, I apologize. I used your last name even.
That's right. Ty Spiker Christensen. In fact, I was thinking more about the title of the podcast, and this is just unbeknownst to Andrew. You could be the father with concerns, but I'm the father with unbridled rage and maybe righteous indignation, but that's what I bring to the table.
That's okay. I think we have the right, because we're fathers, to go either way.
Well, yeah, that's why you become a father.
For sure. And here we have Scott Wilde with us tonight. Hi, Scott.
Good evening. Good evening.
Scott,
Good evening, Ty.
How's it going?
Scott is here with me in Northern Nevada. Scott is also a father. I don't know how many concerns he has tonight, anyway. But you've got one daughter, correct, Scott?
Yes. She is 31.
Okay, awesome. And Scott is also a member of our church, although he's less active, and he knows what that means. And he knows that we love him, and we would love to have him back at church anytime.
I feel the love. I do.
Awesome. And Stacy, too, your wife.
Yo, of course.
Well, so we invited Scott on tonight. There are a lot of issues going on, a lot of discussions going around about the student loan bailouts that President Biden is trying to roll out through an executive order. And we don't need to address that so much. We can maybe later, or maybe after Scott's off, or something me and Ty might do more. But mostly we brought Scott on because he has a lot of experience with consumer loans. How are you a loan officer?
I have over 20 years in finance. Probably close to 15 in collections, and then the other 8 in some degree of loan origination of some kind.
Okay, awesome. Kind of diving right into that whole process, I don't think a lot of people really understand what goes into the evaluation of an underwriter and ultimately getting a loan. What kind of considerations are given when you're issued a loan or not?
Employment history, residency, how long you've been at your current address. Those show stability. And of course, your credit history. When I say your credit history, some of that can be what loans or credit cards have you taken out? How have you handled those? Could also be the amounts. Have you been taking out a lot of $5,000 and $10,000 loans, or are you looking for a $60,000 or $70,000 loan? So all of that kind of plays into
it. Would you say that a higher loan is more scrutinized, or when somebody's looking at, like we can take the Northern Nevada real estate market, for example, where 2 years ago you could get a house, a three bedroom, 2 bathroom house for maybe $250,000, but today in that same market you're looking probably close to 200,000 more. So like, what if somebody is in that same market for those 2 years and they now decide that they're going to get another home, but now it's going to be $200,000 more? How do you look at that from a loan perspective?
Well, the amount of the jump is considered. So off the top of my head, I believe most Teslas that have self-driving ability are somewhere in the $60,000 to $70,000 range. I believe there's some that might be cheaper and some certainly more expensive. Well, if you're somebody who's only gotten, I don't know, a Hyundai Elantra, or a Honda Civic, these are $10,000 to $20,000 cars, and then all of a sudden you want the $70,000 Tesla. That's going to be looked at. It's going to be looked at as to, do you have the money to actually pay for it? And all of your other bills are going to be considered. Why is there such a big jump? Are you in a position now where you've gotten a raise and you're making more money, and so you can afford a nicer car? Do you have a young child and you're going to give the Civic to them and you're moving up? So all of it kind of plays into it. And like you said, it's not, you may or may not get what you ask for. So you're asking for 70, you may not get 70, but if everything looks good to the underwriter, you might get 40 or 50, because you've had $10,000 and $20,000 loans. So maybe doubling up at this time is reasonable.
And I know I'm kind of dominating the questions here, Ty. Sorry, you can jump in
Fine.
anytime. But I'm also kind of curious, because I know you haven't necessarily been in that role since 2019 or 2020 or something.
20, early 20.
And so you probably never experienced the inflation the way it has just kind of gone crazy. But would that
Not
be
as an
part of the
underwriter, I didn't.
Okay. Would that go into the consideration of a loan?
It maybe some, but it's not as much as one would think, because you're still looking at how much do you make and how much are you asking for.
So it's
So
still affordability.
yeah, there is a term in the industry. It's called your debt ratio. How much debt do you have versus how much do you make? And so you've got to kind of fit in within this sweet spot, because if you make a lot of money, it's very common, people who make more spend more. But once you start hitting higher debt ratios, people are going to start looking at things like, are you starting to max things out because you're looking at filing bankruptcy? Are you just using what you have? So those are things, those are concerns. Most financial institutions, if you're a very good customer, you've got great credit and great stability, they might give you 50% debt ratio. So you've got $1,000 of income and $500 worth of debt that you're paying out. So they might be okay with you taking on maybe a little bit more. But if you only make 750 and you still have that 500, that's going to be a concern.
Okay. That's interesting. So they like to see the ratio maybe rise, but not on the debt side.
Well, certainly. But again, you take a doctor who maybe has student loans, and he's got cars and nice house and all these other things, and he's building up his family. Him having a higher debt ratio may not be that big of a deal, but it's everything. It's not. It's all. It's the totalitarian. Excuse me. It's the sum of all the parts, and not one by itself.
So they will look at profession. They'll look at where the money's coming from. That'll be something that'll take into account.
Absolutely. You take somebody who's been a police officer for 20 years. They've got a lot of stability. They've got good time on the job. Chances are they're not just a patrol deputy. Maybe they're a sergeant by now, or higher. So those are good things.
I took out a loan for my home, and I had 4 years of sales experience to back up, my last 4 years of history, but they were like, because you do sales, like, we're going to have to scrutinize this further because you're like, you don't know where your next paycheck's coming from. And I'm like, right.
The
But,
commission.
4 years
Yeah.
behind my back, like that wasn't even enough to demonstrate. So anyway, that was a fun thing to go through. So not throwing shade at anyone. Wells
Oh
Fargo.
yeah. Oh. You know what? People who make commissions, those are hard because you get during the summer, waiters and waitresses and bartenders, they're making lots of money off the tips because people are out spending it. But come Christmas time, a lot of those people aren't going out now. So some of that income changes, and there's ways to look at some of that income, and companies will, I don't want to say they fudge it, but they look at it and they figure out where they can play around with it a little bit and give a little here where they need to, or take a little here where they have to try and make things work. Finance companies, they want to make money too. Everybody wants to make some money. And so making the loan is good for everybody involved.
in 2008, when you had a lot of the mortgages that were just kind of being dealt out, were those because the mortgage companies were taking a higher risk in the loans, or how do you understand that?
Well, keep in mind, my experience is consumer loans
Right.
and not so much mortgages. But we were, as a society, our economy was doing really well. Coming into eight, maybe coming out of 07, we were doing really well. And people were trying to get these loans. And with mortgages, especially in this area, a lot of people were being speculative and thought, I'm going to buy this house. The rates are really low right now. And what a lot of them did is got an adjustable rate mortgage. So right now it's really low, but here in a few years, that rate's going to go way, way up. And so people who had 7 and 8, maybe even $900 mortgages, when those rates adjusted, they were paying $17, $18, $2,000 for their mortgage.
Hmm.
And so it just took a massive strain on families and their incomes. And there was a lot of, oh no, what do we do? Not just on the consumer side, but also on the mortgage lender side. They're trying to figure it out.
Yeah, they don't want those people out of the house either, because then
No,
they don't have any income coming in.
that's right. No company makes money taking the collateral back. You lose it. Okay, you lose something. There's the cost of actually doing it, the cost of selling it again, and it's better to keep the person in it. But back in 2008 and 9 and 10 even, you had families that they weren't able to pay these mortgages, and so a lot of them were looking for that short sell. I believe that's what it was. It was a short sale. And so they would kind of work with the lender and a buyer and come up with a dollar amount that everybody could agree on. It got the person who could no longer afford the mortgage, got them out of the house, got the lender some money, got the buyer a house at I believe, a reasonable price.
Yeah.
But
Well, sorry, go ahead.
the problem with that is the lender still owed a portion of that money.
Yeah.
By the person who now sold it. That person has caused a loss of some kind for the lender.
And that's when the bailouts started to come in, right?
Bailouts started happening and a lot of bankruptcies started happening. And when I start hearing about some of the student loan forgiveness, my first thought is, what is the nature of the forgiveness? Because if it gets reported that it's settled for less than the amount owed, that hurts the consumer. That hurts your credit. That affects your interest rate and your buying power. It means, it tells people that you owed money and didn't pay it all back. So that is my first that is like one of my first things when I start hearing about the forgiveness is, what is the nature of the forgiveness?
Yeah, and we wanted to talk a little bit more about that too. I know we're kind of going a little long here, but we I wanted to know what you have experience in consumer debt, so I want you to speak more to that, and you can bring in a student loan and mortgage and that. But what are some of the consequences you see as as people are unable to pay off those loans? What kind of happens? They don't
Well,
automatically go into bankruptcy, for example, just because they
no,
can't pay it.
no, certainly not. So one of the first things is understanding your contract. And when you make a payment, the lender applies it in a very detailed way. It's usually interest, fees, and then your principal balance. Well, if you're in a position where you're slowly not able to make the full payment or make it on time, that means there's more time between payments and you're paying more interest and your balance stays high. If you're late and you get assessed a late fee, that's money still not going towards your principal balance. So when you start down this road, you're now paying, when you start paying more in interest because of lapses of any kind, you're paying more for that vehicle, that product. You're paying more than what you originally agreed upon, but it's because you're now kind of breaking that contract. You said you would make payments on, we'll say the 5th of the month, and you're making them on, the 10th, and that interest just keeps accumulating.
Yeah, speak to that a little bit because I'm curious. The interest, it has to compound as well, right?
Every day you have the loan, every day you have the loan, you're accrued interest. So very few loans. I actually, in over 20 years, have never actually seen a loan where you prepay your interest. I have not personally seen it. I have not worked for a company that has done them. All of my experience has been, you have a loan for, if you take out a 5-year loan, you're paying interest for 5 years.
Yeah, no one's
Now,
interested in paying the interest.
oh no, no, no. But with regular consumer loans, in the beginning, your balance is high, and most of your money goes to the interest, and that's pretty standard, even on credit cards. But if it's a 5-year loan, towards the end, once you get to years 4 and start going into that last little stretch, you're going to see your balance dropping a lot, because more of that payment is going to that balance, because your balance is smaller and there's less interest being accrued daily. Every day you have the loan, you're accrued interest. Since I'm kind of on this interest kick right now, a lot of finance companies will make offers of some kind to defer payments. They basically say, I know one lender in the area who they do it every, like going right into summer and right before Christmas. And so what they'll say is, hey, it's Christmas time. If you pay us 25, $30, you don't need to make your December payment. We'll extend it to the end of the loan. We'll defer it until the end of the loan. They're not saying you don't ever have to pay it. No, you're going to pay it. It's just at the end. So instead of it being a 64-month loan, it's 65. But here's the thing that they don't really spell out. First of all, you're paying, we'll say $25. So that's a processing fee. So they're making a little bit of money. Every day you have the loan, you accrue
You
interest.
still have that interest.
Just because you didn't owe a payment doesn't mean your interest stops. So come January, when you make your next payment, mind you, your last payment was in November, you're paying interest for 2 months.
Essentially, you're not paying that month, and they're already aware that it's not going to happen,
Yep.
right? But they
Yeah.
charge you $25 for it.
Yeah, they sell it as a it's almost like a gift. Here, you pay us 25, You don't owe this payment in December. And as a result, come January, you're going to be paying, well, a lot of times it could be almost your entire payment goes to interest.
Yeah.
You know,
I have
one
a
of those.
question for you, Scott.
Sure.
So as far as, let's say, hypothetically, if an executive order were put into place from President of the United States to forgive 20,000 of student loan debt, I mean, do you see, like, is this being an actual benefit to anyone? Because let's say he forgives, waves a wand, and this debt just goes away, which it doesn't. You can't just forgive or just evaporate 20 grand. I mean, it has to be paid somehow. So it'll be paid through taxes. It'll be paid through printed money, which could either cause more inflation or through taxes. This is the only way. Government doesn't, they can print money, which would cause more inflation, or they can simply tax people. So other people that didn't take out the loan in the first place, they're going to be responsible for footing the bill. People that have already paid off their student loans, people that, so my question is, does anyone learn anything if we just simply erase $20,000 of student loan debt? And
No.
where does the response, well, what's to say that this doesn't need to happen again in 10, 15 years? Have we learned anything? I mean, if we think that the problem is that student loans and education cost too much, I mean, we're just inflating the cost of an education of a degree that likely won't benefit you or land you a job that's going to give you any meaningful salary that's going to help you pay off this loan in any meaningful time. So
That's right.
there's no safeguard against this happening again in another 5, 10, even 3 years from now. The next group of students that come through 4 years,
for a year,
8 years.
let's not get carried away.
Yeah,
3
yeah.
years.
So,
But you're right. If we do it now, and I know that there's people that can use a little help, and I understand that,
mhm.
but it's got to be the right kind of help and structured the right way. So if we do this, I do not see it as anything that is really, really beneficial, because, well, like anything else, we'll take the interest rates. Well, a lot of things come back to interest rates, but we'll use that as an example. If a company takes a loss, they don't really take a loss because they're going to make that money somewhere else, be it raise the interest rate. So, the president waves his wand, says, I'm forgiving, whatever amount it is. Well, these lenders lost that money. If he just magically says, wipe this off your books, that company lost that money somehow, and they've got to make it up somehow. Maybe price of books go up or classes go up. Interest rates for student loans go up. So people who, don't benefit from the forgiveness, maybe they're paying more. Somebody pays for it.
Now, if I'm under the impression, I don't believe that he can simply, like, it's just, this will turn into a government bailout essentially for people that took on private loans. I've never seen something like this before. Again, I've seen people choose to take a federal grant for school, or, whether it's a Pell Grant or it's, no, that's to help like young married couples or whatever that are the full-time students. But you also have now student loan forgiveness is how it's being portrayed as an executive order. I mean, this isn't even a channel where, you're going to have it go through courts. You're going to have duly elected officials that would waive on something like this. So I don't think that this debt would actually just necessarily go away. And I don't think it would actually be harming the lenders as much as we think it might, because I think this is just going to have to funnel through either taxes or through means of printing more money. Because again, I don't think you can just legally say you as a lender no longer can request 20 grand. You now have 20 grand
the
less.
lender is still going to look for their meat. They're going to look
for sure.
for
And the problem is,
it.
Like I said, I mean, and my whole thing about this is, like, if we have an issue saying like, okay, college tuition costs too much these days, great, let's address that problem. Or, hey, maybe we should reconsider whether a college degree is necessary in all types of fields. It seems like a lot of people are being sold this bill of goods, which is you have to go to college in order to get a meaningful job. You have to go to college in order to earn an income that's going to be, sustaining you and your family, your future family, and down the road. And in the end, it seems like a lot of people are seemingly disillusioned to the fact that, oh, I went to college for 4 years and now I have all this mountain of debt. And yeah, like you said, I'm now only paying interest. I'm not even paying off the debt. I'm going to have this till I die. So, and
Yep.
again, see, it's as simple as saying, well, why not just forgive everyone's student debt ever? Like, why is it cap it at 20,000? Is there a problem with going up to 50,000? I know some people spend as much as 20 grand a semester. Let's say, you got 120,000 student loan. Why not forgive the whole thing? Because obviously there's like, but see, this is my point, is like, you can't just simply wave a wand and have this go away. It's the same thing with the lenders. Like, we were living in a home in 2008, and the owner of our home wasn't making his mortgage. We got evicted.
Oh,
It's crazy. So it's like,
yep.
okay, all right, we'll find a new place to live. Thankfully, my high school was really understanding. They're like, hey, you can still come to this high school because this is a crazy time we're living in, right?
Yep.
So it's like, okay, there's like real life consequences. But in the end, it's like, okay, so this guy lost his home. The bank possesses it. Great. The bank doesn't want to keep this house. They want to sell it. Foreclosure. Hey, here, come auction it off. Great. Now it's not our problem anymore. Someone bought the home. We no longer have to care for it. Because like you said, it takes time and money. What drives me crazy is, like, again, this idea like of accountability. Like, I was taught, at least at a very young age, to take one personal responsibility. So the idea that you could take a personal decision and take a loan, and maybe you're young, but we all agree that 18 is legally an adult. You can sign and go into a
Absolutely it
contract.
is.
So you've taken on personal debt, and now other people are now going to have to bail you out for your decision to take that personal debt. It's just, like I said, this doesn't get rid of a problem. In fact, in just another few years, we'd have to do this again. So I can't see this in any good faith other than, okay, this is just a way to buy someone's vote. Like, it seems
It,
very disingenuous to the American way of life, and very disingenuous to people that see what this is for what it is. This is just merely a bribe. I can't see
it,
it in any
it,
other
it
way.
very much so is.
Yeah.
I mean, I do see where you're coming from. I don't see how, I personally do not see how this forgiveness of any amount is going to do any real good. It's going to hurt. I have a feeling it's going to hurt more people than it helps.
Yeah, you said, you said it earlier. I wrote it down. It's got to be done the right way.
It does,
If
and I
if you're
and I
gonna
don't
do
know what that
anything,
is.
right? Yeah, we all. I think we all recognize that there's a problem with education, public education. Let's start there. But then you get into this post-secondary education, this graduate, and everything else. And and to Ty's point, you've got 18-year-olds that are signing away that, oh yeah, that's no problem. Or if they go to Harvard compared to the community college down the street, I mean, the tuition per semester is not even comparable for how different it
Yeah,
is.
and they don't know. You know, there's there's people our age. There's people older than any one of us who don't understand some of those simple things that I kind of talked about in the in the beginning, about how payments are applied. And you expect an 18-year-old to understand the long-term effects of $100,000 education, a $200,000 education?
So where does the responsibility lie most with? Who bears the brunt of this? If we're
As far as
Yeah, as far as
as far as teaching the 18-year-old,
mm,
or who's going to end up paying for the forgiveness,
because
or both?
I almost feel like when I was 18, like, I was aware of how much my college tuition was, and I started at a basically a junior university, Brigham Young University of Idaho, relatively inexpensive, but that is largely subsidized through tithing from the church. So my education, I looked at it and I thought, that seems like a reasonable amount of money for what type of education I believe I'm going to get, my bachelor's. And then I like understood that, and I didn't actually even need to go in a great amount of debt. Now with other people, it's like, okay, either we agree that everyone as an 18-year-old legally can consent to something like this, or they're being tricked by what, the grant lenders, the loan officers. Like, are these predatory loan officers? Do we blame the lower education? Do we blame everyone in high school telling you that you're never going to amount to anything unless you go to a 4-year college or get your master's. You're
I
not
know
going to amount to.
me, I know for myself growing up, I was told I needed a college education by my parents
Yeah.
to succeed. I'll tell you, I do have a 2-year degree that I don't use at this time, and I make more now than I did in
With
other areas where I could have used my degree. It's no, we need to explain to our youth that a college education does help in certain cases, not
Mm,
in all, and it's a good thing for some people and not for everybody. I mean,
absolutely. I also agree with that. Here's another radical idea. I think that people would greatly benefit um, to earn their own college education. I don't think you should have
absolutely.
your parents paying for it. I think you should value your education, because very early on, if you're paying for it and you realize it's not doing you any good, a lot of people drop out. And you could always list. I've heard so many people say like Bill Gates dropped out of college. I'm like, yeah, whatever. Uh, that's great for him, but like I met my employer when I was at school, and I wouldn't have met him otherwise. So it's like, oh, that was a good thing. But I also realized I didn't need the education. It wasn't that he was interested in. It was interested in my sales experience. So it's like I sold 2 years of pest control, and that's what got me my job. So it's like I had experience doing door-to-door sales. You don't need any type of degree to get that employment. However, I was in the right place at the right time. And I'm like, oh, I'm actually glad that being at the university at the time I was, that I ran into my employer. So to
and
me, it's like,
all of our cases here, even
no,
for me, we're none of us are using the degrees that we got for the employment we had, and it's very typical. I want to say that's above 50% of
I think
adult
that's fair.
Americans are not working in the field that they got their degree in. So we're we're really kicking ourselves by punting this down the road. We need to figure out what's going on.
well, I enjoyed my college experience. This is two simple fixes I think we could work on. One is I think that we could have more specialized degrees. Like you hear about trade school, you hear about specialized universities that go into a specific type of training that's going to help you with day to day application, what you're learning to what you're going to be doing for your job. Like I think about entrepreneurship, which is what I went to school for business, and I was like technically going to school for the idea that I was going to start my own company as I left. Now, I am self-employed now, but I still think about that often, where I was like, I didn't necessarily form my own company, let alone LLC. So it's like, I think one simple fix is there was a lot of courses that I took during my 4 years that I thought, this really isn't doing anything other than proving to the university I'm doing like the bare minimum that's required of me just so I can get the degree. But I'm like, a lot of this class was just filler. A lot of these classes were, and again, great professors and everything, no knock on them. But I'm like, I think a simple way is, if you find something that you want to specialize in and something that you're passionate about, maybe we can make more and more universities or more and more courses. I mean, like
Specialized degrees.
specialized degrees, which I think would hyper focus what you're supposed to be trained in. And obviously, I think life, you're supposed to continue to grow and educate yourself and seek learning and knowledge from the best sources. But to me, I think this would actually eliminate a lot of the debt, because trade schools are certainly much cheaper, and you can get trade schools in 9 months. You can take like online courses now for just about any trade that you want. You have YouTube tutorials that can literally teach you how to do most anything. Now,
Absolutely.
again, so my thing is like, I think that an emphasis needs to be put on a realistic talk, and before you take out this loan, maybe figure out what it is that you're passionate about. Take an online course. I turns out to get my real estate license, which I just did last year. It was something I was interested in doing. I think all in all, it cost me like $200.
Yeah.
And I did the studies. I learned I could do it, and I passed my exam. I can now sell real estate, and it's like, oh, like I can literally do a career spending $200, and it took me 1 month to do the course. So I mean, again, it's like, as much as going through 4 years of university, as cool as that would be, and as meaningful as it was and impactful it was on my life, I think we really need to just help our youth understand what they're passionate about. Find the element. I've heard it described as the element. It's what's the British author? I can't remember his name. There's a good book about when you find something that you're passionate about, it comes naturally to you. For me, it's sales and working with people. So when they find that element, find that specialized degree, and I think we're going to eliminate a lot of this problem. And
So
then
you're talking about we gotta intervene probably before high school graduation and say, hey,
yes,
I know that there's a big push in our society that you need to go to college. You need to get a college
absolutely.
education or you need to have a degree to work. But the reality is that you need to find what you want to do first.
Help them with
Absolutely.
electives in high school. There are great programs in high school, both in school and extracurriculars that could help kind of lean, your child
And
to
in
something that they might be
those
more
first
interested
years
in.
of university, we are essentially retaking those high school classes, like the
Absolutely.
Yep.
general ed classes.
Yes,
Yeah.
Oh,
absolutely.
absolutely. Absolutely. And I think you kind of touched on it just a minute ago, Ty. Taking some of these degrees and getting rid of some of those courses that aren't needed. I myself, at one time, my degree's in law. Okay, I have an associate's in law, and I had to take an anthropology class. The run of the mill guy down the street doesn't even know what anthropology is, but I had to take it for my 2 year
For a law
degree.
degree.
Sounds
Yeah.
right.
It just, we need to trim some of these classes for them, some of these courses, so that the degree makes sense. I know when I went to school, I was told, Scott, got to take anthropology or a science so that you're a well-rounded student. No, that it
That's
does
not going to help me in my career. To
it
be
doesn't help me
well-rounded.
at all. It doesn't help me at all. I remember one obscure fact from that class, and I throw that out once a year, maybe. It does me
Yeah.
no good.
I
So
really,
having
I
these,
really learned to enjoy planet Earth in my biology class in college. That's that's what the professor just pushed play. Okay, this is
oh
great.
gosh,
And the last thing I
oh
would
man,
stress about this, I think the second easy fix is realize what you're going into study for. Like if you're pretty aimless, I think it's a really bad idea to start your college education without an idea. I have many, many friends that I was going to school with at the time, and they changed their degree 2, 3, sometimes 4 or 5 times. So they had already done all the entry level classes and courses for a trajectory to get them graduated by 4 years. They ended up staying there 5, 6, 7 years, and at a college that
And
easily
that's
could have been
me.
done in 3.5.
Yeah, no, I was there for 7 years because
All right.
I had one direction and I got to a certain point where I realized, oh wait, the name of this degree is completely different from the goal of the degree, and I have to complete a different degree to get there. So I got to switch gears, and then I go on that gear and realize, oh, this isn't what I thought it was either. So I've got to switch again. And I think you're right, Ty. I'm full on board with you. In France on my mission, I realized from 16, I believe, their high school years, they are in an internship. So they're
oh
going to high school, but they're already on track for a profession. And you can't really change very easily once you're on that track. And I don't
oh.
agree so much with that. I feel like that's a little too that's kind of limiting our own freedoms as a nation. But I do really like the idea that we need to start having these conversations with kids at a younger age, and it's not happening in our schools.
What a great incentive. You could incentivize businesses to hire on 15 to 16-year-olds as apprentices or as interns, give them government grants to do that. And then you would get kids that were more interested in entering the workforce and becoming much more valuable and ready to work as young as 17, 18 years old, ready to
Yep.
start their career because they've already been doing the job for 2 years. I mean, like any job you go to, you put on your resume, all you do, the trick is just to sound like you already work there. I mean, like when
Yeah,
you have a
That's
resume, you
right.
just need to make it sound like you already work there, because then they're going to be like, oh, good. This potential employee is not going to be a big pain in the butt to retrain and break everything that you know about your preconceived notions about coming to work here, because you need to do it the way we tell you, right? That's what it is to have an employer.
And then they have to
So-
do it anyway because they lied on their interview.
Exactly,
Yes,
exactly. And then they have to
yes.
learn everything anyway, and it's like proficient in emails,
Yeah.
proficient in
Oh,
sending
gosh.
emails, reading emails, deleting emails. So yeah,
Well,
I think that's a really good idea. So take what they do in France. Let's give some sweet grant money or government money to big companies that might be willing to, or even small businesses that would be willing to hire on apprentices and interns where they otherwise
well,
can't
and
or don't have the
that would
means
be
to do.
great. That'd be great if we could do that, and if we can start a movement, that'd be even better.
Yeah.
But I take away from this that uh, we're a smaller group, and what we can do right now is we can have those conversations. Each one of us, I think, we're in a position where we can talk to parents or grandparents or children that they're in that time frame that, hey, maybe you don't have to go to college right now. You know, we've got to. I think we got to start that conversation soon, because really, what our public education system seems to be doing is producing a bunch of professors. They're
Yeah.
training people to be trainers.
Sounds pretty
Yeah,
cyclical, you know. Yeah.
It is
Garbage in,
cyclical,
garbage
yeah.
out.
Yeah. So anyway, we are way up against time. So thank you, Scott, for being on
My
today.
pleasure. My pleasure.
Thank you,
Thank you for
Ty.
having me.
And until next time, I guess, have a good night, you guys.
You do the same. Nice meeting you, Ty.
Yeah, great meeting you, Scott. Take care.